Hello everyone, today I'm going to discuss on whether 2022 is a good year to invest. For those who have not started investing and are thinking of doing it this year, I hope this video will be useful for you. For those who have already invested, hope you can find some value too. But before I go on, I am hoping to achieve 1000 subscribers someday. But before that, I will need to get 100 first. So I hope you can like and subscribe to my channel to help with the YouTube algorithm. Your little support means a lot to me. So, if you have been following the stock market for the first quarter of this year, you will realize that the market has been very volatile. Between January and mid-March, many stock prices have fallen by a significant percentage, including strong companies like Apple, which has fallen by 17%, and Tesla, which dropped by a whopping 31%, and S&P 500 has also fallen for around 13%. But then, out of sudden, the stocks recovered massively within a week or so, and now the top 10 companies' performances don't look that bad. With this wild ride, coupled with the ongoing war and interest rate hikes in US, some investors may have paused their buying or investment plan temporarily. But personally, I see 3 good reasons to invest this year, or even now, like right now. First up, let's take a step back and look at the stock market situation. Since the end of last year, many growth and technology stocks have gone through a round of massacre. Here are some examples. Square, Sea, Teladoc, Roku, just to name a few. They were all down by at least 40% and some even hit 60%. With this bloodbath, I see it as the first reason that investors can start investing or continue with their buying this year. Well, some may ask, what if there is another huge or similar correction in second quarter or later half this year? This concern is valid, but let me share this quote with you. I mean, what if there isn't a crash? Are you going to miss the bull rally up? The future is unpredictable, but historically, sharp market drops have often been followed by large and long upturns. For instance, the pandemic-triggered bear market of Feb to March 2020 saw the S&P 500 drop about 30%, but by August 2020, the market has gained back all its losses and was up around 50%. Then, when you fast forward to March 2021, a year after the flash crash, S&P 500 has gained more than 1,600 points and is about 70% higher than the same period in 2020. Here's another stats. Even if the current correction continues and reaches the bear market territory, in other words, more than 20% drop, the average US bear market has lasted for about 9 to 10 months. In comparison, the average bull market lasted for more than 2 years. Also, stock indices lose about 36% during bear markets, but gain more than 100% in bull markets. Okay, I know it may sound scary to start investing given the recent volatility and when many stocks are in the red. But when you look at the stock prices in 2021, they were so expensive. The whole stock market was like a big balloon waiting to burst. So now with the latest correction, which well may not be the last, most stocks are relatively cheap. For instance, if you are shopping for stocks like Nvidia or Microsoft, despite the recent rally, they are still cheaper than they were about 4 to 5 months ago. I mean, spare a thought for those who started investing in 2021 and bought stocks at high prices. Like me. But guess what? I continued to invest and bought some dips earlier this year, and currently my portfolio is sitting on the green already. Next, there are lots of talks on the brief inverted yield curve recently, and it may sound strange and even risky to start investing with a potential recession lurking around. Well, I have done a video on recession vis-a-vis the stock market. You can check it out in the link above. But long story short, usually a recession is followed by a massive recovery and upside for the stock market. Who knows, we may be at the start of the recession since the 2 years and 10 years yield curves briefly inverted recently. But on the other hand, some may say that the inversions should stay longer to have any meaning. Honestly, that does not really matter in my opinion. Instead of timing the recession or waiting for confirmation or a better year to invest, why not stay invested as the average return for 5 years after the recession is a whopping 120%. Personally, I feel that whatever black swan event or crash that may happen this year, it is going to be a blip or dot on the stock chart in 10 years' time for long-term investors. Look at this chart. There were so many major events happening over the years that gave you the reason to sell or not to invest. You have the debt crisis, trade war, COVID crash, etc., and a few recessions. But the market didn't really care and went up thereafter. And what if, apart from the ongoing war, nothing significant happened this year? What if the war comes to a good end? And because you were anticipating a crash, a recession, a better year to invest, and it did not happen, your money ends up losing its value due inflation, which brings me to the next point. The last reason that I feel this year is a good time to invest because there is almost nowhere to place your money. Yes, sometimes the reason is just as simple as this. I mean, inflation is rising around the world. Take for example in Singapore, a lot of cheap hawker food saw their prices increase since the start of this year, at least based on my personal experience. In addition, Singapore government has announced the hike in consumer tax, aka GST, which will start in 2023. Then, let's not forget the ongoing war will continue to drive the price of commodities up. To highlight, while living expenses have been the same or even increased compared to pre-pandemic days, the interest rate for fixed deposits offered by the banks have not gone back to pre-COVID levels. For instance, in the past you can fetch 1.9% for fixed deposit by CIMB, but now you can only get about 0.9%. So with this, do you think it's still a good idea to place your money in the bank and let it rot away? I hope this last reason, though simple, is compelling enough for you to start thinking about investing if you have not. So, is 2022 a good year to invest? The answer to that question is an emphatic yes, but the same cannot be said for traders or gamblers in the investment world. Personally, I feel that a good time to start investing is always yesterday. Therefore, if you haven't started, I would think any time is a good time, any year is a good year. In 10 years' time, your future self will thank you for starting the investment journey, with a little regret of not starting it earlier maybe. But well, better late than never. And if you are a newbie like me, feel free to invest into safer options like ETFs such as Syfe or companies like Apple and Google. In fact, many good companies with inflated valuations and share prices have come back down to a more normal range, aka discounted levels. So just buy into these companies and do nothing for the next 5 to 8 years, and I'm quite sure the returns will be better than putting your money in the bank. Alright, that's all for this video. If you are about to start investing this year or only started investing last year, let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.